What's up everybody? Welcome to the Stocks channel. My name is Cory and today in the stock market we're back to critical support as SPY is starting to break down through the support trend line. Are we about to see the bears raid the stock market? First up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, today I want to do a special update. I'm going to be spending a lot of time on SPY, and that may be at the expense of some of the other tickers that we typically do analysis on, but I do believe it's very important to cover the topic of whether or not SPY is going much lower. That way you are well prepared going into tomorrow, and this should also help you going into next week. Alright, so the first thing the bears are going to be looking at is whether or not this was just a counter trend rally and we are going down to finish an equal leg move lower, which is very likely going to take SPY down here to fill this gap at 369. Now this is a valid zigzag pattern to the downside, and it does look very compelling because it also does look like we have a breakaway gap, which is exactly what you would expect to see in the next leg lower as momentum is picking up and things can really start to accelerate to the downside. So I'm going to go over all of the scenarios and then I'll tell you my opinion on what I think is going to happen, but do keep in mind the stock market couldn't care less what I think, but I'll offer my opinion anyway. So this move to the downside is a very valid bearish market structure that would fill all of the gaps to the downside and very likely give us that double bottom retest of the June lows. And I'm going to go ahead and throw up a picture of seasonality right here up on the screen. And you can see this does match seasonality with midterm election years, that the second half of September is typically bearish. If you get a weak second half of the month and we continue to lose these critical support zones, which are equivalent to SPY 390, it is possible that the selling does pick up velocity as we start to accelerate down to the downside to fill the gaps right around 369. So yes, this is a valid scenario and it does match seasonality. So do keep this in mind that while SPY is starting to break down through support, and if SPY does start breaking down below 390, this is going to be a real possibility. Okay, so the next possible scenario is that SPY finds support around this zone at 390 and we do bounce up to fill this gap and we do make an attempt to see some type of double bottom. Now this scenario is very simple and it does require us to bounce as soon as tomorrow. And this is probably the least likely scenario because I do think the next scenario I'm going over, which is my preferred scenario, is probably the highest likelihood scenario to play out because it does cause the max pain to the majority. So do keep this scenario in mind because we did not spend a lot of time on it, but it is very simple. It means we need to start bouncing immediately and turn this into a double bottom. Now the scenario that I prefer, because I do think it is this scenario that has the highest likelihood of playing out, is that the stock market did not go all of this way for nothing, and it does match the theory that I thought we were going to get a bull trap into a bear trap. So to finish out this bear trap, I think the market will break support, go snatch up all of that liquidity from the longs that have their stop losses down here. That will allow us to reach the max drawdown that we have from the back test, which was back in 2009, and possibly we even put in a new max drawdown to fill this gap or stop just above this gap, which is going to be near the lower Bollinger Band. And this is going to look like an extremely bearish event, and it is going to look like the market wants to capitulate, and it is going to happen very quickly. So in the event we do get the flush below support and liquidate the longs, the market will now have the liquidity from all of those positions getting stopped out, and I think the market is very likely going to see a very sharp reversal all the way back up until we can erase all of the bearish sentiment and start getting people bullish yet again. And then I think it is possible the market could continue lower from there, and then we could possibly fill those gaps to the downside. Now this does still match seasonality that it's going to be a very volatile September, and it does allow the market to get all of the liquidity to the downside and still punish the very high bearish sentiment that thinks we're going down in a straight line. So I prefer this scenario because the market likes to hurt the majority, and this scenario should hurt the majority. So do keep this in mind that if we go much lower, you don't want to be getting overly bearish as we break down, because I do believe it is going to be a very quick bear trap and we are very likely going to see a very sharp counter trend rally. The counter trend rally should turn people back into bulls who think this correction is over and we're going right back into another bull trend, and then we could see yet again another dip, and how deep that dip goes is to be determined. But if you are in favor of the bearish scenario, I think you need to reset your expectations of when that next leg lower may come, which means it may not come closer into the end of October and possibly even into the midterm volatility. Now, none of these scenarios matter if you don't understand how to follow price action. So the number one thing you need to remember is that SPY is instantly more risk off if it starts breaking down below 390. Below 390 opens up the door for every single bearish scenario. So while SPY is below 390, you need to be in a position where you can handle the market going much lower without significantly damaging your portfolio. If SPY is breaking below 390 and you are just blindly loading up on long leverage positions like call options because you just expect the market to bounce, and then we actually do reach full-blown capitulation, you are going to be in a very bad position, and that is not something you should be doing if you're properly managing risk. Now, do keep in mind, SPY is instantly risk off below 390, but it can instantly be risk on above 390. So that is really the only level in SPY that I think you need to pay very close attention to. So in the extremely bearish scenario, we have already started to break down, and that's why we lost the support trend line. But we have not yet closed below 390, and below 390 is where a lot of those stop losses are going to start triggering, and then we could start to see a lot more bears pushing the market lower as those bulls are getting liquidated out of their long positions. So keep all of this in mind and make sure you have a very solid trade plan, or just sit in cash and wait for more clarity in this market, because this is going to be a very sensitive area in the market that could lead to the next leg lower and possibly a retest of the June lows. But the problem, in my opinion, with expecting capitulation and a test of the June lows is that just everybody right now is way too bearish and everybody is expecting it. And I can't think of the last time that everybody was expecting a significant move lower in the market and then it actually happened. Remember, the market loves to hurt the majority, and right now I could be wrong, but I do believe the majority are expecting much lower prices, and that could be the only reason why it doesn't happen. So keep that in mind and don't just go with the crowd, because the crowd is typically wrong. So just a quick recap, you're getting a lot more bearish below 390, but do keep in mind it's possible it will be a very quick bear trap, and then you can instantly get more bullish while we're above 390. Above 390, we still need to break the resistance trend line, which is going to be up here right around 400 to about 404. And it's going to depend on when we test that resistance trend line, because it's obviously a negative slope. The bull breakout will be above the 50 daily moving average, which is currently at 403. And then we'll be looking for the gap fill just below 409 and a retest of the daily high at 411. And if we can break above 411, that will be looking extremely bullish. But right now we're much closer to critical risk, which is our support level at 390. So you're going to manage your risk around this level and keep in mind all of the scenarios that we just went over. On the NASDAQ 100 triple Qs, we were down 1.67% today. And as you can tell, the triple Qs did close below the support level, which was right there at 293, which significantly increases the probability we're going to fill this gap just below 288 and possibly test support at 287. This is why I think SPY could likely break support very quickly to liquidate the longs, because we could see something very similar in the triple Qs, get that bear trap, and then see the very sharp reversal, and then start to get bullish sentiment building up in the market yet again. So keep this in mind, because this does look like the highest probability, and you will want to stay risk off while we're below 293, and then you can get more risk off below 287 because a retest of the June low is all the way down there right around 271. Now this is very likely to fill this gap, and as you can tell, this is the only gap left in the triple Qs. So do not be surprised if we fill that gap, instantly find support as we're liquidating out the long positions, and then instantly start to bounce. Above 293, you'll be looking for resistance right around 296 and the resistance trend line at 303, and the 50 daily moving average is just below 308. Very quickly, I want to look at ARKK because I do believe it's a great indicator of risk on sentiment, and you can see that ARKK was up 2.19% today, but it did find resistance around the 50 daily moving average and previous daily highs just below 46. If ARKK breaks out and fills the gap at 47 and then starts to break out above 47, I do believe that is going to be a bullish indication, but a rejection from here will just simply look like a rejection from resistance, and then you will be looking for more downside. On the VIX, we're only up 0.34% today, so we're not seeing the VIX spiking as you would expect on a very volatile sell-off, which tells me this is not quite yet panic selling if that's what everybody is expecting. In order to expect panic selling, I would like to see the VIX spiking, and we simply did not see that today, but we do still have the VIX elevated above 24, and I continue to caution you, this is a volatile market that could see more downside while the VIX is above 24. so you can instantly get more bullish if the VIX starts to crush down below 24. On Microsoft stock, we were down 2.71%, and Microsoft did lose the support at 252. And as you can tell, Microsoft is a market moving stock that did break down to a new low today. And if it continues to go much lower, it's going to put more downward pressure on the indices. However, this is why I do favor a bounce in the short term, is because Microsoft is coming back down to retest the June low at 242. And that is very likely going to bring buyers back into this stock. If it breaks down below 242, that is extremely bearish, because we'll be looking at brand new 52-week lows on a market moving stock that could be heading back down to about 231. But do keep in mind, as Microsoft gets more oversold, it becomes more attractive for the longer term investors, and that is very likely going to lead to buying. On a bounce off 242, look for that resistance at 252, and you can instantly get more bullish above 252. On Tesla stock, we were up 0.38%, and Tesla was trying to break out but found resistance exactly where we would expect, right there at that resistance at 309, and we're going to need to see the bulls breaking above 309 to get into the 330s. From here, it's possible to get a rejection from resistance at 304 and come all the way back down to fill the gap at 289.5. So you're instantly getting more risk off if we continue to see a rejection from 304. Downside support levels are right around 296, the gap filled just below 290, and then 283. On Apple stock, we were down 1.89%, and Apple is also leading the way lower, just like Microsoft, making the next leg lower, but still finding that support right where we would expect at 151.5. On a break below 151, that is going to be bearish, and that does mean we could see the next leg lower, which could take us down to 147. However, just like I said with Microsoft, these market moving stocks could be finding support and could be getting ready to bounce, and that is why I don't want you getting overly bearish in the indices just yet. If Apple bounces off of 151 and breaks back above 154, it will be looking more bullish with strong resistance up there at 159. So jumping back over to the S&P 500, I know we didn't go over all of the tickers that we usually go over, but I felt it was necessary to go over all of these scenarios to help you better prepare for what could be right around the corner. I gave you a lot of scenarios, so the only thing you have to do from now is understand every scenario and then make sure you build a trade plan that follows price action and make sure you're prepared for anything. The only way to truly become a profitable trader in the stock market is be prepared for all scenarios, check all of your biases at the door, and let price action do all of the talking. If you have a preconceived idea of what must happen, you are going to bake that bias into your trading, and that is not the correct way to be a profitable trader. You shouldn't care if the market goes higher or lower from here, because you should have a plan no matter what it does, and then just execute to that plan. Always manage risk, because keeping your losses small and your winners large is the best way to remain profitable. Also, don't forget, I still have 50% off your first month of Bank Trade Alerts. All you need to do is apply the coupon code Labor Day, all one word, no spaces, at checkout to claim your 50% off discount. You can find out more information about Bank and learn how to subscribe by clicking on the link in the description of this video. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord server, where you can get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.